Snap Projections is a web-based platform, which means that you can access your account from any Chrome browser on any computer without the need for a download. You'll go to snapprojections.com, and then in the top right corner, you can click Login in order to enter your username, password, and you'll have the option for a multi-factor authentication for added security. I've input all of that during today's session, so I'll click Login, and I'll be taken directly to my clients page. This is where I can access all of the plans that I've created in the past. I can go in and update the numbers if I've learned new information from the client. I can also run alternate scenarios to answer additional questions, and I can generate client-facing documentation such as charts, tables, and commentary. Today, we're going to be creating a new plan for a prospect that we're meeting with named Angela. Before we dive into the software, I'm just going to take us through the questionnaire that we've completed ahead of the session. You'll see that every Snap user has access to these default templates that Alex will share during today's session. You have the option to customize the logo, add your own advisor contact information, and then you can share the file with your prospects and clients in order to gather the information needed to create a plan in Snap. One of the greatest points about Snap is that it can be used for something as quick as a 10-15 minute prospect call with 5 to 10 points of data being collected, all the way up to a more complex client situation with corporations, investments, investment properties, and retirement goals that span quite a few different spending goals. In this case, we're just gathering a few pieces of data for Angela. We have her date of birth. As we scroll down, we have her key question, which is how much should I be saving and how should I invest my money? We've gathered her salary, which is $105,000 a year. We have her defined contribution pension plan details. And then we have her capital assets, including her tax-free savings, RSP, and savings account. And then we know a bit about her ongoing contributions. So with just about 10 points of data, we can input that into Snap, and we're going to get some very valuable information right off the bat that we can use to facilitate a discussion with Angela about how we would help her to achieve her goals. We can start to build trust and demonstrate how we'll provide value throughout our working with her. So in the software, we're going to click Add New Client, and we'll create a plan for Angela. All right. In the top left corner, we'll see that there are 3 key sections to the Snap software. The first is the scenario setup flow. This is where you'll input all of the base data that you need for the plan, such as Angela's expenses, incomes, assets, debts, and government benefits. Once we're done inputting the data that we've gathered, we'll then be able to proceed to the planning page and see how all of that information comes together to show our client's life on one page. This is where we can customize values on a year-to-year basis as needed and see how things are tracking over time. Once we're ready, we can then go to the client report in order to customize the charts, tables, and commentary included in a final client-facing PDF. For now, we're going to continue on through the scenario setup flow, and I'll continue entering the data that we gathered in the questionnaire. One of the great things about Snap is that it comes with pre-filled assumptions for a lot of the base data. So we have things like a default retirement age, default projection length, and you can use these defaults in order to create a quick projection, or you can customize them as needed for your client's unique circumstances. We're going to leave a lot of these as is, so we'll go with a default retirement age of 65. We'll show a projection length until age 100. We'll use the default guideline assumptions from FP Canada, and that is 2.1% for inflation, and then the cash, fixed income, and equity return assumptions. Now, these are the gross returns, and FP Canada recommends reducing the values to account for any investment management fees. So we'll just reduce these to 1%, 2%, and 5% even. I'll click Next to go to the expenses page. This is where we can enter in the client's base retirement spending goal, as well as additional expenses such as car purchases, gifts to kids, vacations, anything that you want to itemize and explicitly call out within the plan. Now, in this case, we haven't gathered any of this from Angela. We're actually going to have Snap help us calculate what the retirement spending would be given her current plan, and we'll do that at the end of the process. So I'll click Next. We'll enter in her current salary, which is $105,000. And then we have the option to index that at any desired rate, or I can actually link it to the general inflation rate in the plan. We'll enter that as employment income, so that SNAP automatically deducts CPP and EI. And then we'll enter that as taxable and RSP eligible, so that SNAP can appropriately treat that income. We're going to run that until the year before she retires. We also have the option to add additional income, such as rental income or other sources, and we can add defined benefit pension plans as needed. I'll click Next and go to the Assets page. You'll see that by default, SNAP has added a non-registered account to the plan. This is to both show how to input a capital asset in your projection and also to provide SNAP with a place that it can allocate excess cash flow in future years if that's being projected. Because we have accounts for Angela, I'm going to delete the default and we'll just input her existing information. So she has a tax-free savings account currently worth $50,000, invested as 30% fixed income, 70% equity. She has an RSP, similarly invested. She has a DCPP for $35,000. And she has a savings account with $8,000 currently in cash. Across the top of the table of accounts, you'll see that we have the option to customize additional settings. We can tailor things like the TFSA contribution room, the RSP contribution room. These are all pre-filled with default conservative assumptions that provide the client with 1 year's worth of contribution room. If you have their notice of assessment or you know more information about how much room they have available, you can always update these as needed. I'll go to the Employer Matching tab and we will link the employment income that she's currently earning to her defined contribution pension plan so that we can indicate that 3% is being contributed by her and 3% by her employer. We have the option to add real assets to the plan, such as her home or investment property if we learn more about those being in her plan. For now, we'll go to the debts page. We haven't learned any information about existing debts, so we'll leave this empty for the time being and go to the government benefits. Here's another example of SNAP pre-filling default assumptions. We've assumed that she's going to receive roughly 55% of the maximum CPP benefit, which is the national average value. If we learn that she's going to receive more than this, we can always update the plan later, but for now we're just getting a default base assumption that's going to allow us to start to calculate some numbers for our discussions. We'll also assume 100% of the OAS benefit, and that's really in about 5 minutes, we've been able to input all of the data from Angela and create a base projection for her situation. You will see on the left that there are additional tables available. We could add insurance policies. We could conduct life needs analysis to see if more insurance is necessary. We could add RESPs, corporations, and also customize additional settings. But for now, we're just going to proceed to the planning page where we can see all of this information come together to show Angela's whole life on one page. Now, as I land on the planning page, this page can seem overwhelming at first glance, but once you know what you're looking at, it becomes incredibly intuitive and it's a very valuable tool for planning. On the left, we have the year and the client's age. We have the assumed leftover spending that's available for the client, and this is based off of their employment income of $105,000, less CPP and EI deductions, and total taxes. As we continue to the right on the page, we can see the capital assets and their balances over time as they grow at our indicated rate of return. And then we have key information about the estate. The last two adjustments that I'll make to the plan before we're ready to have SNAP calculate a retirement spending is to add the contributions that Angela is making on an ongoing basis. So if I click on the contribution to the TFSA, I can enter in $5,000 and I can copy that down for any desired period in the plan. In this case, I'm going to continue all the way while she's working. When I make that change, you'll see that the Run Scenario button in the top right has turned red, but my numbers haven't yet updated. So rather than constantly moving the software on you and changing the numbers, we wait for you to make any changes on this page, and then you can click Run Scenario in order to apply those changes and have the numbers recalculated. Similarly, I'll enter $5,000 to the RSP, copying that down while she's working. and then I'll click Run Scenario. You can see that Snap has now adjusted the amount of discretionary spending that's available to account for the fact that she's now contributing into her capital assets. Now that we've entered in all of her account balances, her ongoing contributions, and her income, I can go to Recommendations and have Snap calculate how much Angela would be able to spend each year of retirement without running out of money in the projection. So at her current savings rate and given her current starting point, at age 65, she could start spending roughly $49,000 per year, and that's in today's equivalent purchasing power. So the software is automatically going to adjust for inflation for us. She'd be able to spend $49,000 each year until the end of the projection at age 100. So I'll click Apply and Run, and that's going to enter in that target spending for us. So as I scroll down to the year of retirement, you can see that Snap Projections has now input that target retirement of $49,000 per year, and the software is automatically going to fund that spending through making withdrawals from the various capital assets, such as the defined contribution pension plan, the non-registered account, and the tax-free savings. We can see that that $49,000 a year is fully funded all the way to the end of the projection, where we make our final withdrawals from the RSP and the defined contribution pension plan. I can go to the top right and click on Charts in order to see this a bit more visually. You'll see that we have the base expenses that drop off a bit at age 65 once she retires. We can see her income taxes over time and how those change. And then we can see contributions to capital assets while she's still working. We can also see that the total inflows fully cover this full spending need, so she's fully funded in this current projection. From the cash inflows chart, we can see where the money is coming from over time. For the majority of her plan, it's employment income, and then she uses a combination of OAS, CPP, LIF income, and withdrawals from the other capital assets to meet her spending needs. And then we can also show the resulting net worth, and how that's broken out across her different account types. So just like that, in about 10 minutes, we've been able to create a base financial projection for our prospect, Angela. We've been able to show her how well she's tracking towards her retirement. We can tell her that she's not on track if she wants to maintain a consistent level of spending throughout her lifetime, because she'll have to drop from roughly $66,000 a year down to $49,000 a year when she retires. So we'd be able to have Snap help us to calculate either how much more she would need to save if she wants to spend at a specific rate in retirement. And then we can also help optimize whether to put all of that money into the TFSA, some into the RSP, and we can demonstrate to her the added value of making those changes to her plan. So this quickly shows how you can use Snap Projections in your prospect conversations in order to, once again, build trust, start the data gathering process, and help show your clients how you'll work with them to provide value, and hopefully convert more of your prospects into long-term satisfied clients. For now, I'll turn it back over to Alex so that she can take us through the next phase of our session today, where we'll talk about segmenting your existing clients and how Snap can be used to address a wide range of financial planning needs.